And welcome to Vox Markets. I am John Human, and I'm joined today by Matt Timmins, Joint CEO of Fintel, the fintech and support services provider to the retail finance industry. How are you doing, Matt?
Hi, John. Delighted to meet you. Great, thank you. Are you?
Yeah, not too bad, thanks. Not too bad. We're going to talk today about a couple of pieces of news that you've issued recently, a product update, but most importantly, the trading update that we saw
Sure.
last week. The figures were fantastic. Can you talk us through the headline numbers and the highlights behind them?
Yeah, thank you, John. I mean it's a pre-close statement, so we'll provide obviously a greater update in September. But essentially, we've announced that revenues from the core business are up, which is terrific. It's a strong performance from the business in the first half of the year. We've announced improvements to EBITDA as well, and also maintenance of SaaS and subscription levels, and also strong performance in terms of EBITDA margin. So a good set of results. And as I said, we'll update the market more fully in September.
I'm looking forward to that, obviously, to getting more detail behind the actual divisional performance. Can you talk us through what's really driving the growth here in the core business? Growth in terms of sales, but also profitability, because there's obviously this big shift to digitisation that you're pushing through. One would imagine that's really beneficial to the company's profitability.
Yeah, absolutely. So there are a number of tailwinds for us. So first of all, any times there are changes in regulation, that helps the business because more intermediaries choose to buy services from us to support them through those changes. So increasing regulation, things like the FCA ruling on consumer duty later on this year will have an impact and has started to have an impact on the number of subscribers into the business, which is great. Also then this pivot that we made last year from annual repeatable contracts with distribution partners to an ongoing monthly fee for services over a multi-year agreement has helped bring forward the kind of, or smooth out the seasonality of that revenue. So we've had it's expected around about 60% of our revenue this year from those manufacturers will come in the form of our distribution as a service product, instead of what used to be relatively lumpy annual relationships and agreements. So it's the move towards DaaS, the increase in regulation that's driving the demand. In terms of the digitisation, what we've done is we've moved those product provider relationships onto a digital portal where we share data and insights on the market with them on consumer preferences and buyer behaviour. Around about £40 billion worth of financial product transactions goes through our fintech each year. So we have a huge wealth of knowledge and information on what's happening in the market and why people are buying certain products or why they're discounting others. And so that's really helped to build consistency of revenue and increased revenue in the first half of this year.
Absolutely. So you mentioned that you're giving your product partners lots of data and feedback to help them improve their products. What are the big trends that you're seeing there that you're feeding back to them?
Yeah, so I mean, we're at the moment, a lot of our partners are asking for trends around ESG investing. So there's a lot of money going into the development of what you might call ESG-friendly investments. And what investment businesses and product manufacturers are keen to understand is what is the consumer demand for ESG products, and where is that demand skewed? At what end of the risk spectrum is it skewed? What age group and age range find ESG investing more appealing than other age ranges? Does it change by client demographic, or does it change by advisor type? And so that's the kind of data, insight, and information we're putting together at the moment for our clients in that space, helping them really understand where is the world of ESG investing at the moment, and how has that changed over the past couple of years, and where might it likely go as this trend continues. So that's just one example for you on how data and insights on millions of pounds or billions of pounds worth of transactions really helps product manufacturers to build the products of the future.
Yeah, so it sounds like it helps consumers get the products that they want as well. So very much like a virtuous circle.
Exactly right. Exactly right.
So can we sort of talk a little bit about what problems you're helping your customers solve? So you cover the whole industry from the consumer through to the product manufacturer. What is it that you know in essence as your sort of mission do to help the industry from throughout that value chain?
Yeah, absolutely, really importantly, and the whole vision behind the business is to inspire better outcomes across retail financial services. We've talked in the past about retail financial services being a great platform for consumers. So we genuinely believe that consumers have access to thousands of different financial products from hundreds of manufacturers at a really competitive price, and it works incredibly well for consumers. But for everyone else operating in the market, it's really quite complex and quite fragmented. So we help product manufacturers to understand buyer behavior and trends. We help product manufacturers understand what products are selling and what products aren't being recommended and why. And essentially with the aim to help them build the products of tomorrow, to help them build better products that are more akin to what consumers want. And then we also help those product manufacturers to distribute those products via financial intermediaries. And we look after thousands of financial intermediaries, over 3,000 businesses. And we provide them with compliance and support services to help them run a better business and do a good job for their clients. So again, around 80% of all investment businesses and 75% of all mortgages in the UK ends up in the hands of a consumer via a financial intermediary of some description. So structurally really important. Thousands of different businesses all across the UK, from mortgage intermediaries to IFAs to wealth managers. And all of those firms have a common and binding need for compliance. They all comply with the same regulator. And what we do is to help them do a better job for their clients. We give them everything they need to run their business compliantly and successfully. And we do that for a monthly fee. So that's how we help intermediaries do a better job. And then for consumers, our aim is to help consumers to essentially make better informed financial decisions. So with these thousands of different products that are available in the market, how can you possibly as a consumer know which one is the right one for you? How do you know whether car insurance policy A is better than car insurance policy B, or pet insurance or life insurance or pensions or anything like that? And we have the largest product database in the UK, covering 40,000 different financial products. And we know and understand the relative componentry and complexity of those products. So when we offer to consumers a star rating as a shorthand device to be able to compare products via, we do that on the basis of the underlying componentry of the product. So this is not a peer group rating, or it's not a rating based on service or something ancillary to the product. A 5-star product that we've rated will have richer and more features than a 4-star product. So we genuinely help consumers to make better informed financial decisions, so that they're not just buying on price alone, that they can compare product against product and understand which one will help support their needs more.
Mm. Yeah, makes a lot of sense. You mentioned regulation, and obviously there's been huge amounts of regulatory change in your industry over the past 10 years or so, and there's a lot more to come. You touched on consumer duty. What are the big regulatory drivers that are sort of coming down the track that they're going to keep your customers coming back to you for insight?
Yeah, I mean, I think the regulation is constantly evolving and changing, and we get insights into what the regulator may or may not do next through various different consultation papers that we're asked to support and input on. We're also a member of the Association of Professional Compliance Consultants, who have a line directly into the regulator. And then sometimes we work on directionality on what we think is important and structurally important to the market going forward. And I think there's been a couple of years where there hasn't been much change in terms of regulation. There's COVID years, and things that were planned in 2018 and 2019 haven't come through to fruition yet. So we're still waiting to find out whether some of those things are on the back burner or whether they're about to be released. But the biggest change at the moment is consumer duty. I think that's the strong directive from the regulator around consumer duty. And I think the relaxation of the rules on affordability on mortgages, we will also start to see the impact of that come through. And I suspect there may be further regulatory changes around that in the future once we see the impact of that. The consumer duty being the main one at this moment in time.
So you've changed the group, or you're in the process of changing the structure of the group, or you have changed. You've made a number of acquisitions and disposals over the years. Very strong cash flow, supporting a very strong balance sheet. What's the plan? In terms of your plans to sort of keep developing the group in terms of getting it into exactly the sort of shape that you want it to be through M&A, through investment.
Yeah, absolutely. So we started off our businesses steeped in the provision of regulatory support for businesses. For 20 years, we've been doing this as a largely people-based business, understanding regulation and making sure it's relevant for client set, and then sharing the information with them. What we changed dramatically in sort of 2019 was our direction to be able to digitize that support. And instead of providing regulatory support from person to person, to be able to do that still through people-based knowledge, but then to put that knowledge into systems and platforms to enable regulation to help intermediaries earlier on in the life cycle of giving advice, rather than something that you do and check after the process. So the acquisition of Defacto was really pivotal for us in doing that. Defacto provides fintech to around about 8,500 users. So that's what gives us the fantastic data set. That's what helps us understand product construction. And that's what helps us also digitize the people-based services. So we're talking about reg tech here. We're talking about taking regulatory information and building it into the technology so that it flags early to the intermediary firms what they may or may not need to be aware of or change. So that's the big sort of change in directionality for us, which is digitizing what was a hugely intensive, people-intensive business. And we started well on that journey. The acquisition of Defacto, as I say, was pivotal. The cash flows, as you point out, are fantastic. We're kind of 120% in terms of cash flow conversion. So we acquired Defacto for 74.3 million a couple of years ago, and we did 50% of that as a raise and 50% debt. And we paid off all the debt now, and we're back into positive cash territory. So it gives us real confidence that we can go out and make large-scale acquisitions. We have a £45 million RCF facility and cash in the bank to be able to do that. I think the last couple of years, we've seen valuations look a bit ridiculous in some cases. We've seen a lot of private equity money coming into UK retail financial services. And we've seen businesses with little to no distribution and unproven tech ask for huge amounts of money for their business. So we're kind of standing by our beds, I guess. We've got the cash to be able to deploy. We've got the strategy which is proven and working well. And what we need to find now is valuations to reach a more normal, rational level. And then we'll look to deploy some of that capital and an RCF facility to build out our business.
And you've got organic investment opportunities as well. I think the update the other week regarding investment into research services as part of Defacto kind of suggests that there are ways that you can improve the product portfolio without acquiring.
Yeah, absolutely. So we're putting money into development work internally. So one of those exciting projects is development around Defacto and a consumer hub to help consumers be able to compare products based on the sort of relative quality of those products, as I said, the star rating, and then be able to compare them dynamically against a product that they may hold already, and be able to compare products by price and functionality as well. So that's something that we're working hard at. Also, our research services within Defacto, we're putting a lot of money into that, and upgrades to our fintech. So, for example, a new module on cash flow planning has been released relatively recently. So again, quite a lot of development work into organic growth. So both sides of the business be it the intermediary side or the distribution side, are both getting investment into them.
Absolutely. Well, it sounds very exciting. As I said at the beginning, congratulations on a very strong trading update, and good luck with the strategic plan. It all sounds to make it makes a lot of sense. Thank you very much.
Thank you, John. Pleasure to talk to you.
Thanks.